Hey, what's up, tycoons? What is up, traders? Coming at y'all with a viewer request on Cleanspark. Okay, ticker symbol CLSK. I do those viewer requests every single week. So all you have to do if you want to see your stock, your ticker, cryptocurrency, whatever it is comment down below, and I'll be happy to get to it as soon as I can. We're going to go over the major retracement levels, how to use these, as well as also using the fib tool over here to give yourself a breakout level and some valid price targets to the upside or to the downside. Just in the example of this video, it does happen to be to the downside, as it has been a brutal bear market and we are having a lot of breakouts to the downside, but you can also use it to get bullish price targets as well. Not only that, we're going to go over the MACD and how to spot potential exit signals and exit signs. All right. Good things to really start using to help protect yourself and navigating the battleground that is trading in the stock market. Okay, trading is like going to battle. It's like going to war. You need to have the proper weapons, as many weapons as you can, and then you need to know how to use them properly as well to increase your odds of success on the battlefield. So not only that, we're also going to throw in the relative strength index. So we're using three tools: Fibonacci, we're using the RSI, and we're using the MACD. Some simple things that you can start to learn to give yourself an edge and truly understand some price action. Okay, so make sure to smash the like button, subscribe to the channel if you're new, and we'll get straight into it. So we're going to zoom in here on the past real quick and just visualize and understand what it is that I'm speaking of. Okay, so what we have here is going to be the Fibonacci retracement levels. That's what we're going to be looking at right here. So we have a swing high. Okay, we connect it down here to our swing low. So you see we have this sharp move to the downside, right? Nothing is going to move in a straight line up or in a straight line down. It's going to move down, retrace, continue lower, or it's going to move up, retrace, continue higher. Now you can spot a reversal when you break through those retracement levels. Okay, so if you break through the retracement levels, you can make lower lows, and you can make new lows, or you can make new highs, right? If you are able to pull back and then break through those retracement levels. But that hasn't been the case. Okay, so we've came down, we established that. If we came up, look at exactly where we came to, our 38.2 retracement level, and then we continued heading lower. All right, so that's how we use those. If we take a look at where we're at currently, we're currently in our three major retracement levels. Okay, so we have this new high up here that we have. Okay, and we have this move to the downside. We've retraced up exactly to the 50% retracement level and found resistance there. So 281, 306, and 256 are the three major resistance levels we have to break through to get a reversal, right? So we're either going to come down, retrace, continue heading lower, or we could break through these levels, right? If we break through these levels and we do something like this, then we have the possibility of getting a reversal and trying to make a high and then a higher high somewhere over here. So, that's how you use the fib retracement levels. Now let's go into using the breakouts, okay, to really give yourself, some valid price targets to the upside or to the downside. So what we're doing is we're establishing a level right here. We're establishing a low. We have this low right here that we haven't broken below. Okay, we're going to take this low and connect it up to the most recent high right over here. All right, now it's going to give you the 100% level. Okay, you're going to look at the 127.2% level and then also the 161.8% level. Those are the three that I most commonly use. You can throw some others on there, but these are the ones that work good for me. Now I make the blue, the 100% level blue, right? Blue for breakout. I'm going to see if we break below this level, then we're getting a breakout. All right, and then I have my other ones in red because these are bearish price targets. And we can see here that that's exactly what we did, right? So after we broke below here, we came down to our 127.2 extension level, right? And look at where we ended up finding support, guys. We ended up finding support right along here. Believe it or not, about 70% of trading done in the market is fueled by algorithms, okay? These big institutions that control most of the money in Wall Street and in the stock market, they're not leaving it up to, people just drawing with the naked eye, right? They're using algorithms, mathematical formulas, and the Fibonacci is a mathematical formula that you can use to your advantage as well to give you some algorithmically and mathematically generated support and resistance levels, okay? So it's not a coincidence that as soon as we broke there, we started to consolidate right here along that support level. Now look at what we did. We came up, we retraced, right? And a big support and resistance thing is old support, okay, turns into new resistance, right? So this was support here, we broke that, and then it became resistance, and it was resistance right here, and we continue to head back down lower. So that's a great example of flipping prior support, okay, into resistance and now rejecting it. So that's how you get your breakout price targets, right? If you take a look, we ended up coming down and actually hitting the 161.8 extension right over here, right? That's where we ended up finding support after we broke our much smaller retracement levels, right? So what we did was we established we had a low here in blue. Okay, we connected that up to our high, and we see once we break below this level, we're going to head down to 245 and 207. And sure enough, we did. Okay, we broke through those levels, and if you take a look, we came down. Old support becomes new resistance. It's resistance right here. We break above that resistance, and we retested this breakout level, and we haven't gotten over it. Okay, so I just wanted to explain that and visualize it first. What we're going to do is we're going to come here and get rid of this now. Because what's most important is our three major retracement levels. Okay, we have three support levels to the downside. Below those, if we do start to fall, that we can pay attention to. Right, again, you can see we found support here really well at 180. That's our 161.8 extension down. Okay, we have support here at 207, right? We also see we found a little bit of support there as well. And then we have 245. But the three major levels of resistance that we need to break through are, again, 255, 281, and 306. Now, you may be a little confused and wondering, what are these circles, right? Why do I have these circles highlighted? Well, that's where the relative strength index comes in. Obviously, this is going to measure the relative strength of a stock at its given price. So there's something that happens called divergences, right? Where they should be respecting each other, right? So if this is making a low and a lower low, the relative strength index should be making a low and a lower low as well. Well, in this case, right, we're making those lower lows, but we actually get a bullish divergence. Okay, what that is we have a low at the same exact point on the chart, and then we have a higher low at the same exact point that we made a lower low. So making lower lows on the stock, but higher lows on the relative strength index is an example of bullish divergence. And sure enough, we got a nice rally, right? And it was a completely justified and healthy rally too. When you think about it, when you have the move down, it has to retrace. It's not going to move in a straight line. So it's retraced up exactly to our 50% retracement level at 281 and gotten rejected. So, we need to push through these, okay, so that way we can get the move higher. But currently, we have something known as hidden bearish divergence. Okay, so now let's pay attention to these two circles, right? So we have a high right here, and then we have a lower high right here. So, we're making lower highs, but on the relative strength index, we have a high and then a higher high. Now, the reason that this is called a hidden bearish divergence is because the relative strength index has run up and now has more room to drop to the downside. Okay, making it easier for it to get a type of pullback. Okay, all right. So when you have a high, okay, when you have a high here and then you have a lower high here, but over here you have a high and a higher high, that's going to be what's known as hidden bearish divergence. So think about it, right? We have the move down, the healthy retracement up to our major retracement level, and we have hidden bearish divergence. So a lot of things, two things are kind of suggesting that this thing is going to head back down lower. Okay, now none of these strategies all work 100%. Otherwise, everybody would be trading in the market and we would all be billionaires, right? So you really have to combine some things together to really give yourself an edge, right? So that's what we're doing. We're saying, hey, we're at our major retracement level. We're making a hidden bearish divergence. Now, one thing you can also look at again is going to be the MACD, right? And so this could be the third and final thing to really tell us if we're going to get a drop on Cleanspark. Now, Bitcoin and crypto have been rallying, so it could fuel a further rally in this. And I'm not saying 100% that this thing has to go down, right? Not saying that 100%. I'm just breaking things down. Of course, as soon as we break out of these levels, we could get a reversal, but pay attention to the MACD, right? So you're going to look for exit signals on the MACD by noticing this red line. And when it crosses below the white line, that's actually going to be an exit signal. Okay, so let's take a look at our first example of the exit signal we have here. And we can see we got a MACD sell signal right here, okay? And then we ended up getting a move to the downside, right? You know, we get the MACD sell signal right over here. We come down and we make a new low. Over here, we get a MACD sell signal as well, right? So MACD sell signal right here, and we get a sharp push to the downside. Notice how we had our blue breakout level here. We got the MACD sell signal above it, and then we broke through our blue breakout level and came down and found support at our bearish price target, okay? Now over here, same thing, right? We're getting a MACD crossover. We have a support level here that we know that we're at, right? So it gives it before we break the support level. And then what happens? We come down and we hit our 161.8 extension at $1.80 right over here. You know, so MACD sell signal is very, very useful and very important for potentially an exit signal, right? So right here, boom, we drop down to a major level. Same thing over here, MACD sell signal, drop down to a major level. Okay, over here, MACD sell signal, we drop down to a major level. So again and again, you know, these strategies work. You just have to figure out how to use them and then start combining a couple of them together, right? So that's it for today's video. Appreciate y'all watching. If we do break past 306 and we flip it to support, I'd be happy to do an update video, right? So we need to break past this and flip these levels to support, right? We need to start bouncing off of them as support rather than resistance and rejecting those. I'd be happy to do an update. And just let me know if you guys would like an update on it in the future in the comments down below.